Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak here, a podcast available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 17th of October here in London. I'm Caroline Hepke. Coming up today, the market's very convinced. Billionaire investor Stan Druckenmiller weighs in on which way he thinks traders are betting in the US election. The European Central Bank looks set to lower interest rates for a second meeting in a row. Plus, why a spike in borrowing costs is giving Italian wine producers an ugly hangover. We have a special report. Let's start with a roundup of our top stories. Billionaire investor Stan Druckenmiller says that markets are pricing in a Donald Trump victory ahead of next month's US presidential election. Speaking to Bloomberg, the one-time money manager for George Soros says that the direction of trading has been clear.
I remember how right the market was on Ronald Reagan in 1980, despite what the pundits were saying. And I must say, in the last 12 days, the market and the inside of the market is very convinced Trump is going to win. You can see it in the bank stocks. You can see it in crypto.
Stanley Druckenmiller, chairman and CEO of the Duquesne family office. Druckenmiller says that he won't be voting for either Trump or Harris in November's election. The billionaire's comments come as Goldman Sachs' trading desk predicts the S&P 500 will end this year well north of 6,000. The bank says that median returns between the middle of October and December the 31st in an election year in the US see returns of just over 7%. And so that would imply the S&P 500 will reach 6,270 at the end of this year. The index has already set 46 closing records so far in 2024. Now, the continued strength of the US stock market comes as polls show a presidential race that is consistently within the margin of error. Speaking to Fox News yesterday, Vice President Kamala Harris vowed that she would be different from President Biden.
Let me be very clear. My presidency will not be a continuation of Joe Biden's presidency. And like every new president that comes into office, I will bring my life experiences, my professional experiences, and fresh and new ideas.
Kamala Harris speaking to Fox News' special report with Brett Baer with some testy exchanges during that conversation. It came as Harris spent the day trying to broaden her appeal to conservative voters with an event featuring dozens of Republican officials who have endorsed her campaign. Meanwhile, financial filings reveal that Elon Musk has donated $75 million to his pro-Trump super PAC, with much of the money being spent on get-out-the-vote operations for the Republican candidate. China will double its loans for unfinished properties to $562 billion. The government is increasing its credit quota as part of a package of measures announced by the housing minister Ni Hong and other officials at a briefing today.
We, alongside colleagues from the Ministry of Finance, Natural Resources, the PBOC and NFRA, are acting very swiftly to focus on the implementation and on new policies as well. A raft of policies have been taken to stabilize the market.
Chinese Housing Minister Ni Hong speaking there through a translator. The change comes alongside news that the country's economy probably grew at its weakest pace in 6 quarters. Economists surveyed by Bloomberg think that data that's due out on Friday will show the Chinese economy expanded 4.5% in the third quarter compared to a year ago. The figures highlight the weakness of the world's second biggest economy just before those policymakers unveiled that property market support. Now to Europe. The ECB's Governing Council is expected to convene later today and widely expected to cut interest rates for a second consecutive meeting. Just 5 weeks after the last reduction, analysts polled by Bloomberg unanimously predict a quarter-point reduction to 3.25%. Speaking on the eve of the gathering, the central bank's president, Christine Lagarde, said the region should use geopolitical uncertainty to strengthen its domestic market. Now, the ECB's decision will be announced at 1:15 European time. That's followed by the press conference at 1:45. We will have live coverage of the proceedings right here on Bloomberg Radio and television. The UK government could raise £15 billion per year from the rich without causing an exodus. That's according to research from two think tanks who are urging Chancellor Rachel Reeves not to be deterred by lobbying. Nimesh Shah, the chief executive of Blick Rothenberg, an accountancy firm that specialises in advising wealthy clients, he disagrees with think tanks, saying that both non-doms and entrepreneurs are weighing exits.
Since the general election over the summer, we've had really two, maybe three messages from Rachel Reeves and Keir Starmer saying there's a 22 billion black hole and the broader shoulders will pick up the burden. And that has set lots of hairs running.
Blick Rothenberg CEO Nimesh Shah speaking there. Rachel Reeves is drawing up plans for as much as £40 billion of tax rises and spending cuts in her budget as she seeks to properly fund public services and balance the books in the UK. Wall Street's biggest banks are on track for their best trading year since the Dodd-Frank era, and that has traders hoping for bonuses. Morgan Stanley CEO Ted Pick told Bloomberg that the biggest trading firms are outperforming their smaller rivals.
There's an element of the leaders pulling away from the pack just because it costs a lot to run those businesses every year.
Well, that was Ted Pick from Morgan Stanley. Morgan Stanley just posted the best third quarter trading gain on Wall Street. The trend points towards the best year for pay since big banks set revenue records, which was back in 2021. That has some traders hoping now for double-digit percentage increases in their bonuses. Now, in a moment, I want to discuss the US election nerves rising in markets, those comments from Stan Druckenmiller and that call from Goldman Sachs. But first, a story that I read this morning I thought was of interest in the run-up to the UK budget. London's luxury home sellers are discounting the price of their homes for sale, worried about the tax implications from the budget. Research from Lonres shows that it's the very top end of the market that's being most affected. That's homes over £5 million. The number of price reductions rose 39% between July and September, partly down to this issue around non-doms. Lonres saying that compared to a month ago, the expected tax changes, though, from the Chancellor might seem less certain to be introduced. I thought that was a really interesting comment from Lonres, though, that actually the speculation around non-doms and other issues like carried interest for private equity and so on look less certain. I think that really plays into the interview with Nimesh Shah, the CEO of Blick Rothenberg, that you heard earlier. You can hear the full interview that Bloomberg's James Wilcock and I did with Nimesh Shah yesterday because it's on the Bloomberg UK Politics podcast. I hope that's something that you're listening to. Of course, it comes out daily, 15 minutes of UK political news. We really drilled down into that issue around entrepreneurs, around non-doms with Nimesh yesterday. He was talking about the issues for non-doms, actually something that you could trace all the way back, in his view, to Brexit, that we were the envy of the world, in his words, with our non-dom and corporate regime, and now we've done a good job of tarnishing that reputation. He had lots of interesting views. Anyway, that was something that I read on the Bloomberg terminal this morning in terms of home prices, but also do download the Bloomberg UK Politics podcast. Billionaire investor Stan Druckenmiller says that markets seem very convinced Donald Trump will win the US presidential election and that a Harris presidency would be bad for business. But he won't be voting for either candidate. Joining me now to discuss this and much more is Bloomberg's markets reporter Valerie Teitel. Hi, Valerie. So Druckenmiller's comments, they were really interesting on the asset classes that he sees as moving ahead of the election.
Yeah, interesting comments from him yesterday. He said that you could see the reflection of a Trump win in bank stocks and crypto. Yes, those two assets have been performing very well. But Caroline, the market consensus around a Trump win would really be around the strong dollar, a possible reignation of inflation, so break-evens going higher, and Treasury yields going higher, especially in the long end due to all this fiscal stimulus, possibly some regulatory easing coming from a Republican sweep. So interesting that he's pointing out bank stocks and crypto, where I think the market is a bit more convinced to be playing out in other asset classes.
Okay, and maybe bigger asset classes. Election years often seen as good for traders. Goldman Sachs pointing this out. Scott Rubner, his prediction for the markets. I mean, you've been talking so much about the record highs.
I know. 46th record high for the S&P captured this week. It was interesting his comment on election year, saying that the fourth quarter normally sees a rally of over 7%, which is above I guess the average rally of the S&P over that time on non-election years. But he said something else that I found quite interesting, saying that when implied volatility resets lower after the election, so once we get past the election, once we get past the Fed meeting, past the November payrolls, there's not that many more risk events on the horizon. So a possible, if your assets you're holding are all of a sudden less risky, you're more likely to add risk and to buy into this rally. So possibly after we get past all these risk events, all this money that had been sitting aside waiting for the election to be over could be put to work. It could be put in the equity market. And perhaps this fourth quarter would really see the S&P taking another leap higher.
Okay, that's interesting. The other issue, though, to factor into all of this is the composition of the House and Senate, given the election. That's going to be crucial to what the president can deliver.
Exactly. And that'll be very crucial for the knee-jerk reaction of markets the days after the election. The Democratic sweep is a bit less clear for markets on how to trade that. They're a bit more concerned if we get a Democratic sweep, maybe capital gains taxes are increased. That could maybe cause treasuries to rally and the dollar to soften. Whereas the Republican sweep, if we get that on election night, that's going to be the real knee-jerk move for the markets, the dollar higher, possibly see these long end yields move, I want to say drastically higher, but let's see what happens.
Yeah.
And I point that out because when Trump won in 2016, we saw a 5% move in the dollar in the days after the election. And we did see this long end yields rising. They rose 230, steepened nearly 50 basis points in the days after the election.
Yeah, okay. Really very interesting. Thank you so much for that update, Valerie Teitel then. So with an eye on the election, which is, only 3 weeks away in the US, Bloomberg's markets reporter Valerie Teitel. Now to our priority feature today, which is about wine and how wine-growing regions everywhere from Bordeaux to Napa Valley and Italy's Lombardy region are grappling with some immense challenges: the changing climate, changing tastes and also tough financial conditions. Now, Bloomberg's Giulia Morpurgo and Antonio Vanuzzo have been touring vineyards and writing about why Italian wine is leaving borrowers with a nasty hangover. Giulia, welcome to Bloomberg Radio and thanks for your time. Now, Italy is still the world's biggest wine exporter by volume. How's it being impacted by climate change?
Yes, good morning. So definitely climate change is having a big impact on wine production. Last year's grape harvest was the meagerest in 76 years, and this year looks only slightly better. If you think about it, climate change is extreme weather. So you can have really, really hot days and even a drought, or you can have extreme rain when it's not meant to rain that much. And both are really bad for vineyards, because in the case of hot days, you've got dehydrated grapes. And in that case, not that many fruits can be produced. And in the case of extreme rains, you've got potential fungi, and that's really bad for the plant as well. So there's a whole new set of challenges that winemakers are facing with climate change.
Yeah, and our drinking habits are changing apparently too.
Yes, for sure. So, for the older generations, wine was really the go-to drink. But that's not really the same with the younger crowd. You've got a generation that, as the director of the Italian Wine Center, Italian Wine Union Monitoring Center puts it, picks his drink based on the occasion. So you might go for a drink that's more like a beer, or you might go for a gin and tonic, or, to be honest, a lot of people just decide not to drink altogether for health reasons.
Yeah, so those are that's the backdrop. And amidst this, you've been exploring the challenging financial conditions. All of this isn't happening in a vacuum. You've seen the financial struggles among winemakers. What are they saying?
Yeah, so obviously higher interest rates have really affected everyone, including winemakers, and they're really feeling the burden of higher interest costs. There's a study by an Italian consulting firm which says that the negative impact of interest rates on the revenues of winemakers has gone from 0.92% 2 years ago to 2.24%, obviously in estimates this year. In just 2 years, it's definitely tripled. So you've got the extra financial burden adding on to the issues that already exist for them. And while for some it just means a reduction in profits, for others, which have piled on quite a bit of debt, maybe to make extra investments or maybe because their owners are not as deep-pocketed, that means that real trouble is brewing, and some of them have had to go to court and seek protection from creditors.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.